We just got major breaking news when it comes to our favorite thing here on the channel. It is the T word. I am talking about taxes, specifically the IRS, because they just announced an update to their tax brackets across the board. So I would like to cover that with you guys because it is very, very important for everybody to be knowledgeable as to what they're actually paying to the state. So let's actually get started with this. We got over here, IRS announces 2026 income tax brackets, updated standard deduction. So yes, they did, because of inflation every single year, they tend to increase the overall threshold for every single bracket, not the bracket themselves. The percentages are staying the same, but the threshold is going to increase with inflation. Now, before we actually get into the tables, here is the basic takeaways. On October 9th, which is as of I'm recording this today, the IRS announced the annual inflation adjustments for 2026. A handful of tax provisions, including the standard deduction, which is huge, and tax brackets will see new limits and threshold. These changes will apply to the income earned in 2026, which is reported to be filed in 2027. So we're not going to see this for, not even next year. It'll be the year after that. But it's still really, really important for everybody to know. So let's show what actually occurred when it came to these tax brackets. Now, I'm strictly going to look at married filing jointly. I'm going to assume that you guys are mostly married and you're filing jointly. If you're not, I will have this link to the website that I'm using, NerdWallet, in the description below, so that way you guys can actually look at it for yourselves and you can look at your own situation. So let's take a look at this. We got over here 2025 versus 2026 tax brackets, married filing jointly. The first thing that you guys should definitely take a look at is the fact that the tax rate is remaining the same: 10, 12, 22, 24, 32, 35, and 37. Now, something that you all should probably know, and I hope that you guys know, but if you don't, I'm going to tell you this right here. These tax brackets are progressive, meaning that when you actually move into the next one, every single dollar within the previous one, you still have to pay. What I mean is, every dollar that you are making from 0 to 23,850 over here, every dollar within this frame gets taxed at 10%. If you get moved to the 12% mark, every dollar within this range gets taxed at 12%, but you also still owe this 10% as well. So you are actually paying basically double the taxes. In reality, 10 and 12, you would actually be paying around 22% in total, based off of how the tax system actually works. So that's just a quick rundown as to how this is actually progressive. A lot of people think that when you move over to the next one, you automatically don't have to pay the one from before. You still have to pay the one from before. So just keep that in mind. Now, when it comes to this, we can see that the thresholds are actually increasing. 10% is going from 0 to 23,850 to now 0 to 24,800 in 2026. 12%, we got 23,851 to 96,950. 2025 to now of 2026, 24,801 to over 100K. So if you were right at the cusp before, if you were making 100K in 2025, assuming that you stay roughly within that 100K mark, or right actually under 100,800, you will actually now, instead of paying 22%, which is what you used to pay before, now you're actually getting bumped down to 12%. So this is an overall good thing. Next, for the 22%, 2025, it was within 96,951 to 206,700. This is getting bumped up to now 100,801 to 211,400. Next, we got the 24% tax bracket, 206,701 to 394,600 to now 211,401 to 403,550. 32%, 394,601 to 501,050. Now in 2026, it'll be 403,551 to 512,450. For the 35%, we got $501,051 to $751,600 in 2025. 2026, this is now $512,451 to $768,700. And the last tax bracket, which is 37%, it is $751,601 or more. This is now getting bumped up to $768,701 or more. So you guys can see that everybody basically got a nice bump up when it comes to this. Now, a lot of people want to say, oh, you see, now the rich are paying less taxes. Yeah, so is everybody else. So I am actually a really, really big fan of this. I really, really am. Now, in regards to this, though, we actually have something also that got affected, and that is the standard deduction, which I would actually argue is way more beneficial than these tax brackets that also got bumped up as well. But basically, guys, the standard deduction, it is the standard deduction that every single person gets. When you file your taxes, every single person gets about $15,000 deducted from their overall gross income, and then whatever's left is actually the threshold that you actually land in, is the tax bracket that you actually land in. So let's actually see how NerdWallet actually explains this. So we get over here, the IRS lets most filers lower their taxable income by taking the standard deduction or itemizing their returns. The standard deduction, a flat amount based on filing status and age, is popular as it requires less work to claim and is often more beneficial for those who might not have deductible expenses. For 2026, the standard deduction will be $16,101 for single filers, and those married filing separately a $350 increase from 2025. Joint filers will be eligible for a whopping $32,200, and heads of households can take $24,175, a $700 and $550 increase over 2025 respectively. In fact, looking at this, we could see that when it comes to single/married filing separately, this is going from $15,750 to $16,100. Married filing jointly or surviving spouse, basically widow, we got $31,500 to now $32,200, and head of household going from $23,625 to $24,150. Now, there is one more thing that we actually want to take a look at this when it comes to earned income, because it actually does affect, well, I would really hope that it affects a lot of people. And that is the fact that now the government's actually increasing the maximum when it comes to the earned income tax credit or the child tax credit for families. So we got over here, earned income tax credit, a refundable tax credit for low and moderate income workers will also see a bump in 2026. The total credit amount depends on income and the number of children, but people without kids can still qualify. For 2025, the earned income credit ranges from $649 to a maximum of $8,046. However, in 2026, the credit will be increased to a maximum, basically adding about $200 to a maximum of $8,231 for qualifying taxpayers with 3 or more children. Very, very nice to see. Very, very nice to see. Now, when it comes to this, guys, we can see that there is a lot of benefits, at least coming down the pipeline when it comes to tax breaks, right? The fact that the standard deductible went up, as well as the brackets also slightly went up as well. However, on this channel, we are investors, so we really want to see exactly how these tax brackets affect investors, right? That's the main thing. That really is the main thing. And of course, then we got to take a look at capital gains tax, because this also gets affected. Now, with that said, capital gains are also part of qualified dividends only, okay? So they both land under the same kind of category. Long-term capital gains and qualified dividends are basically the same thing. They get taxed at the same amount. So with that, let's actually take a look at the capital gains tax rate for 2025. And I'm only going to look at the married filing jointly for right now. We can see that for 2025, not 2026, it is 0% from $0 to $96,700, 15% from $96,701 to $600,050, and then 20% for $600,051 or more. How does this look like in 2026? We can see that it's actually an increase of around $2,000 when it comes to this overall tax bracket. We can see 0% from now to $0 to $98,900, $98,901 to $613,700. This is not landing you at the 15%. And now $613,701 or more lands you at the 20% mark. So as we can see, this is actually going to go up. Basically, you could be making, honestly, by 2027, this number, this 98,000 will probably be over $100,000, which would be insane. The fact that you could make over 100 grand in dividends, right? Qualified dividends, and still pay zero in taxes. That is mind-boggling. So that's just something that I highly encourage everybody to do. Here on the channel, I focus on dividend investing for this reason, because it is the number one way to actually build wealth. Ideally, you want to do qualified dividends, but honestly, if you can't do qualified dividends, if you go into cover call ETFs like your QQQIs or your JEPQs, or even REIT companies that don't pay qualified dividends, at the end of the day, it's still money that you're not working for. So I honestly still like it regardless. Ideally though, qualified dividends are the way to go. But that pretty much does it, guys, when it comes to this news. Let me know, was it helpful? Do you guys even know up until now where you actually land on when it comes to taxes? Because a lot of people do not know, right? A lot of people do not know. So I highly encourage everybody to look further into this. I will have these two links in the description below, so that way you guys can, you know, figure out your own personal finances for yourself and see where you actually land on. But anyways, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help with the algorithm here on YouTube as well as Rumble. Make sure to follow us on X at Phil Investing, and of course, if you're join us on the Discord, the link to that is in the description below. So with that said, guys, peace out, and we will see you all next time. Have a blessed day.